Todd Clark, CEO of CLS Investments. Welcome to our weekly market review. As we continue to evolve our video communication, you will notice a few changes. Moving forward, I will serve as your host. I'm excited to interact with you and bring a greater range of perspectives from our team. Today, Paula Week and Rusty Vanneman join us in the studio.
Thanks, Todd. And hi, Paula.
Hey, Rusty.
Tell me about the week that was.
The week that was.
Yeah.
So basically, equity markets were pretty much down for the most part. You had domestic markets that were down over 1%. You had emerging markets faring a little worse, about 1.8%. Mm-hmm. Developed was a little better, down about 0.5%. Commodities down also over 1%. But bonds did hang in there. I think the big thing is that everybody's just anticipating on what the Federal Reserve is going to do. Yeah. Are they going to hike rates as early as September? And then with the non-farm payroll reports coming out on Friday, pretty much in line with expectations, I think that that's making investors a little bit more cautious, actually.
Yeah.
So
tell us more about our globally balanced portfolios. How are we positioned and how are we doing this year?
We're pretty happy with the way we're positioned right now. So the first half of the year in particular, emerging markets was a drag on performance. What was really surprising, though, is that the first half of the year through the end of June, China, Russia actually helped performance. Yeah. China was up like 12% during that time period.
A lot of people forget that.
A lot of people forget that. They think that they see all the headlines going out in China, and China's actually been hit a little bit harder as of late, but that just makes it all the more of a value for longer-term investors right now.
Speaking of value, I just want to jump in. Our new chart pack just came out. It's on PM Insight. And the one thing that stands out is that the three areas that are the most undervalued, according to the chart pack, are three areas that we're emphasizing in the portfolios, and go to our theme. So you got technology, large cap growth, which kind of ties into our high quality and emerging markets, of course. The chart pack is one of the cool things we do. We've done a lot of cool projects this summer as well, a lot of different things. And I think one of the things that we've done, which is I think really interesting, is doing the deeper due diligence on ETF providers. Oh, yeah. There's a lot of cool material out of that. What are some of the highlights or some of the things you would like to draw out from that?
Well, yeah, we're definitely ramping up the ETF due diligence process. We're going out and we're visiting various providers over the course of the next couple of months, developing a strenuous process for evaluating not only ETFs but the actual providers. Yeah. But then also, it's so important for investors. I think they forget sometimes that it's not all about choosing the ETF with the lowest expense ratio. So, legal structure of an ETF, for example.
Oh, this sounds exciting. Yeah.
It is exciting, let me tell you.
But it is important. It's really important.
It is important because, like if you're looking at commodity positions, a lot of them could be structured as a partnership, which they're taxed quite a bit differently than a regular open-ended ETF structure. All that should be taken into consideration before making that investment.
It's a great point. It's just not a ticker, just not an expense ratio. There's so much more that goes into picking an ETF. That's absolutely right. So you talk about some of this stuff in your weekly, right?
Right.
Great. Cool.
Yes.
Well, make sure you read the weekly, and thank you very much for your time. Stay balanced.